Hello and welcome back to another episode of the Daily Crypto Byte. Today is Thursday, February 10th, and we've got some inflation data coming out. That means the markets have been volatile this morning, but also we've got some really interesting headlines to hit this morning as well. Some news coming out of Russia. Also, Sam Bankman-Fried met with the SEC and Congress yesterday, so going to break that down and a whole lot more. CJ, I know you're feeling a little bit under the weather today, but thank you for persevering and pushing through. How are you doing today, my friend?
Well, it's all for you, Monty. I don't want to torture the viewers any further. So you're going to be my translator today.
Yes. And you've sent me some stuff that we have ready to talk about today. So without further ado, let's dive right into it. And I want to start with that Russian news, CJ, because I think this has the potential to be a big catalyst, not just in terms of price action, but in terms of the way global economies and the way global governments look at cryptocurrency. And this headline broke kind of last night or this morning, and Russia's move to regulate cryptocurrency puts other countries on notice. So they're expected to drop crypto legislation, including tax standards, by February 18th. So that's the end of next week. And it's been a really interesting couple of weeks for Russia and their stance that they've taken on cryptocurrency, because we had their central bank coming out talking about outright banning cryptocurrencies. But then we have President Vladimir Putin coming out talking about how, it would be very risky to outright ban cryptocurrencies. And I think he has some great points here. They talk about how the risk associated with banning cryptocurrencies is just too high at this point. It's just too ingrained in the fabric of the way people think about money. So I think they think that there's more upside in potentially regulating these assets than there is in outright banning them. And that's basically what this article sums up. The political and economic cost of banning appears to be far greater than the risk involved with allowing it to coexist with the legacy of financial systems. So, I thought that was a very interesting headline. And really, this could be a catalyst for more governments to follow suit. And, I'll just quickly tie this in with this headline that broke this morning. Like I said, Sam Bankman-Fried, the CEO of FTX, met with the CFTC, the SEC, and Congress yesterday to go over, what exactly the United States government can do to provide more regulational clarity to investors and traders. And again, this is, likely on the back of this Russian news. We've been, covering this kind of interest in cryptocurrency from Russia over the past couple of weeks here. And I think that's putting a lot of governments on notice, including the United States. You don't want to be, left in the dust in this sort of space race of crypto. And, that involves properly regulating these assets. And Sam Bankman-Fried's point in this article was the fact that, there's so much intellectual property in cryptocurrency that's developed in the United States, but 95% of the volume occurs offshore. And, his point was essentially that the U.S. should make efforts to move that liquidity back on shore. And essentially the way to do that would be providing federal oversight and clarity. I know personally, one reason why, I don't, trade on any, U.S. based exchanges is, one, because there is that lack of regulational clarity. It's often, kind of looming overhead. And there are enough variables when trading. You don't need to add another variable being regulational clarity. So I think that essentially they could bring back a lot of this volume onshore by more clearly regulating this asset class. And, obviously that involves striking a balance between, not stifling innovation, but also protecting investors and traders. So it is a delicate process, and, it will likely take time. But if we wait too long, we'll fall behind countries like Russia, and much of this offshore liquidity, that currently is taking place in, Caribbean islands or, anywhere overseas, could move to a place like Russia if there is clear federal oversight, from Russia anytime soon. And it looks like we may be getting that on February 18th. So all of these things, I think, could potentially be a major catalyst for price. And I think that's part of the reason why Bitcoin has actually looked so strong over the last couple of days. There's been, a lot of potential catalysts thrown out there like short squeezes, but I think this positive news catalyst is definitely, driving price up here and bringing a little confidence back to this market. So couple very interesting headlines, CJ. I know your voice is a little shot, but any thoughts on that real quick? Oh, you're muted, so
I want to move to just some charts first.
okay. Yeah, go ahead and pull up the charts, and like you said, I can be your translator.
Just pay attention to the assets that are resilient right now and are bouncing back. Ten-year yields still going up. Overall, though, already bouncing back and shaking off those CPI numbers that we got. Bitcoin bouncing back. The critical level really is 42. So just stay above there. Monty, please, my friend.
Yeah, no, you're good. I'm gonna pull up the Bitcoin chart here. You made some points yesterday that I want to quickly touch on, and one of those involved this potential resistance at the top of the Keltner channels. And like you said, CJ, this morning's CPI data had the market looking a little bit shaky. Last night, we actually kind of saw a bit of a sell-off in Bitcoin, a little bit of a downdraft here, but like you said, today looking strong already, bouncing back from the uncertainty of this morning. I think potentially some of that has to do with those positive news catalysts. But like you said, I think it's important to pay attention to the assets that are showing resistance today because, we're seeing Bitcoin come up to retest this Keltner channel, this top band of the Keltner channel. And I think this does mark a potential breakout level. And, we've talked a lot about how AVAX has looked particularly strong in the last couple of days here with a strong volume profile. I mean, this candle right here, like you said, could be interpreted as a bearish candle, in classical technical analysis. But like you pointed out, there was a large order that came in, one single buyer that really propelled this thing back up. And I think that kind of made this candle look a little bit funky, but ultimately, just a sustained uptrend still has a little bit of room before the top of this band. And I think ultimately its resilience in the face of uncertainty this morning and just earlier this week, I think will continue here as Bitcoin is showing signs of strength. So last thing I want to touch on as well is ETH. This one was sold into hard this morning, which was a bit concerning. But one thing that we also talked about is the possibility of a retest of this middle band. We didn't even get that. It came down a little bit to that 3K level, but buyers stepped in at this 3K level. And that's one thing that we said we needed to watch out for is, does this 3K level flip to support now? It tried to act as support back at the beginning of the year. Ultimately, that was sold into even harder. But now, we're back above that level. We've come down and retested it already, and it's showing signs of strength here, as you can see from this strong wick. So ETH looking strong, Bitcoin looking strong, and all of that on the back of this inflation data and also the those news pieces that we covered here this morning. So lots of interesting price action, and I think that setting up what we're seeing from Bitcoin today and a possible break out of that Keltner channel could lead to some very, very positive price action in a lot of these altcoins as well. So I think there's a lot to watch today. And yeah, anything else you want me to cover here?
Two tweets that I want to show.
Yeah.
If you could read them.
Yeah, sure thing.
So
yeah, this is from Suzu, one of the founders of Three Arrows Capital. So he says, think the year's macro trades are pretty clear for me now. Long oil, December 22nd, December 23rd forward. Long Bitcoin, ETH, and other high liquidity crypto as hard money. 3, short the Russell SPX. 4,
one thing about the Russell was it's like short small caps, long the S&P 500.
Yeah. So yeah, short the small caps, long the S&P, and then the last one would be short Meta plus Apple, long Google plus Microsoft. And yeah, that does seem to be the prevailing trend here. And then this next tweet is from Crypto Smacks. We've had a complete retail obliteration. Simply put, all the supply is now held by long-term holders. No sell pressure, but also nothing more to be taken. Job's done. This means blue skies ahead. And CJ, this is something that we've talked about a little bit in chat this morning, is sort of the reserve risk aspect of current price action and how much of the recent price action and sell pressure has come on the back of short-term holders capitulating. And then now we have that capitulation falling into the hands of the more steady-handed long-term holders. So yeah, this is the reserve risk ratio. Essentially, it's the ratio of Bitcoin's price ratio to the amount of Bitcoin being hodled at any given point in time. And this is kind of going back to that tweet. The relationship between short-term holders and long-term holders is a very important one in terms of determining levels of critical resistance and also levels of profit taking when these long-term holders start to distribute to the short-term holders. So now that we've hit this reserve risk indicator, of this green area, that tells us that much of the supply is currently being held by those long-term holders. This is typically an area where we see accumulation from those long-term holders, and that often results in a macro bottom before heading higher, and they start to distribute to retail traders. So it's been a long 3 months of retail capitulation here, but like we've pointed out in the last couple of days, on-chain data is pointing to the fact that we may be running out of sellers. Sellers are getting a bit exhausted here, and also we've seen signs, encouraging signs, that long-term holders, whales, institutions, and funds are stepping in at these lows and ultimately buying the dip. So all of this is looking encouraging from a technical basis, from an on-chain perspective as well. And then also we have these, positive news catalysts. So lots of favorable things in the market right now. But I think one thing that will be very, very important to watch will be how the S&P plays out today, on the back of that inflation data. It's only, an hour into the market here. I think we could potentially be in for a lot more volatility as the day progresses. So we'll be watching the markets. We'll be in the chat. Any closing thoughts here, CJ, as we wrap up today's episode? No, all good. Awesome. Well, hope you feel better soon. Drink some hot tea there. Get some lozenges for that throat. I know you're probably already on that, but like we said, we'll be in the chat. So if you guys have any questions at all, want to drop by, you can do so at the link below, markrebellion.com/try crypto. You can try the first week for just $7 if you're not yet a member. If you already are, we will likely be seeing you there later today. Also, please like and subscribe. It really helps out the channel, helps get more eyes on these videos, and we really appreciate it. So that's all we got for today. We will be doing our members only doge the day after this, likely with the same format, me kind of translating some charts for CJ, but that's all we got. Thank you guys so much for watching, and have